This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So today I am going to discuss what I think is incredibly critical to being successful as a trader and or investor. Don't want to make the confusion out there. This channel is for guys that like to trade short term if you want, if it fits your personality, but also for guys that are longer term. And what I want to make sure we discuss today is the division of labor, because I think a lot of people get things mixed up in how they go about trading. And I want to make a really clear distinction about what's going to help you be a lot more successful. And I know there's a lot of you out there that are doing some of the things that I'm going to talk about. And I know that because I used to do it. And so it took a while for me to figure a few of these things out. And I think part of the reason why I think I'm pretty decent at teaching this stuff is because I made a lot of mistakes early on. It didn't come easily for me. It took a little time to really get in a rhythm and understand what mistakes I was making and how that was causing my equity line to not be consistent. So anyway, let's delve into this. I think it's a pretty important lesson. So as I mentioned, I want to talk about the division of labor. And when I talk about that, I'm saying you have to be almost two different people when you're trading. The first is the guy that is he's the planner and he's the analyst. He's the one who has developed a plan. He's created some kind of a plan in place. He's the one who's going to go find the trades. He's either going to screen for them or look at stocks when he has time. And he's going to be the one who develops the entry, the stops, put the targets in and or pick out where the targets are going to go, or develop how you're going to manage the position. And then he's going to have that in writing. And that should be a part of the plan. Now, each individual trade will have its own entry, stop, targets, and those also should be in writing. I usually do that in log format. I have a log and put that in a log so I know exactly what I'm doing on that specific trade. But the outline of that should be in your trading plan, and it should have enough detail so that you can't just willy-nilly say buy something. It's got to have, when you're finding trades, it should be a part of a strategy. So I'll go into that a little bit more in a second. But so I want to start out on this side. That's the planner, the analyst. So this guy's doing a lot of the work, okay? But he's doing it in advance of the trade. When the trade is put on, or when the trade is executing, or it triggers, I should say, then the executioner is the person that takes over from that point on. And now we don't go to the left anymore, okay? This guy is out of the picture, and now you're just an executioner. And the best way to think about this is, so you're doing all this work in advance. You're doing all your worrying before the trade starts, okay? I think I learned that from Dave Landry. I thought that was a great way of thinking about it. Do all of your analysis and your worrying and your constant questioning about the trade before it goes on. But then once the trade goes on, you follow your plan. You have made a commitment to the plan, okay? And you no longer want to be an analyst at this point. Now, I am definitely not referring to intraday trading when I talk about this, because I think if you're swing trading or longer, then you can follow exactly what I'm talking about, this division of labor. I think it gets a lot more difficult doing it from an intraday basis unless you have a very, very detailed plan that gives you some opportunities to take profits for different reasons. I just think a lot of times on an intraday basis, if you're trading that short term, you have to be watching every new bar that comes in. And it's not to say that you're not necessarily doing that when you're doing these longer term trades, but you should have a plan in place that prevents you from getting overly emotional about what you're doing. It should have some semblance of robotic nature to what you're doing. You're not, again, I think that another way to look at it is to say the executioner could be like a 6th or 7th grader. He doesn't, I mean, really, you don't have to have an expert knowledge of the market. Now, this guy, you would prefer to have an expert knowledge of the market and have a really clean idea of what his plan is teaching, what his trades, what he's looking for, all the nuances that take place. Yeah, this guy needs to be well developed in technical analysis, understand a lot of different things I'm going to talk about in a second. But once we get into the execution side, you need to turn all that off if you're going to be successful. I think because the goal here is to be consistent. It's not about trying to be right every time. And I've talked about this a lot on this channel. If you think you're going to be successful by picking off the highs and the lows of every single trade you do, I think you're just in for a very frustrating part of trying to be successful trading, because it's not really how you're going to be successful. I think how you're going to be successful and be consistent over time is to be disciplined. And that's where this executioner comes in. And you almost want to think about it like you have to go and show your wife or your husband every single time you do a trade. You have to go show it to them, what you've done, what your plan was, and did you follow your plan? And I think if you start thinking that way, and I don't think it's a bad idea, actually, if you can do it. I tried to do it with my wife. She wanted to have no part of it. She said, that's all you. I don't want to have anything to do with it. But if you had a wife that had an interest in following what you're doing, I think you would be so surprised how much better you do on this side of the equation. Because I know you're like me, at least when I started, and I would have a trade on, and I had a full plan on, and sometimes I even had it fully in writing, and I would be the analyst, and I would say, I don't like the way this trade is going. I don't like this and that. And I end up either closing the trade early. I didn't honor my stop. I jumped the gun on my entry sometimes, but the more often than not, I would have a stock move in my favor, and I would go to a break even before my plan told me to. And then the stock would come down, take me out, and then it would take off. That happened more often than anything that I did, and it took a long time for me to accept that, and I had to make an adjustment to how I did things, and certainly the way I do my trading plan. But these are things that, I see, you might not have that issue. Issue might be different for you. Yours might be not honoring your stop, meaning a stop, you buy a trade, you have a stop here, it comes down and takes that out, and you say, I'm going to let this one go. I'm okay with this. I think this is going to turn around. And it only takes one to just keep going. And that's what kills your account. So I want you to think about this in terms of dividing yourself in half. And once that trade is on, you follow the plan, stop doing too much analysis, and be more like a robot. Trade is on. Okay, these are my levels. I'm taking them when they hit. And if you can automate them, that even the better. Okay. I also want to make just a quick note about the 4 parts of a trading plan. If you're going to put a trading plan together, you got to start with your position sizing, how big a position you're going to have. And a lot of times that'll be based on the risk size. These kind of can go together periodically. But there might be a component that says if I have a $100,000 account, I never have more than $10,000 in one trade or one. So that could be a component as well. That's irrelevant, not relevant to the risk. So you have your risk size. That's usually based on equity, risk to equity. Okay, so like 1% of equity, 2% of equity, something like that. I think 1% is a really good starting point. And then you want to have detailed requirements that are written down for your strategies. And don't have too many strategies. Have 1 or 2 at the most, especially when you're getting going. And then you have goals and review. And that is, you have a goal of what you're trying to accomplish. You do 20 to 25 of these trades, and then you review them after the 20 to 25 trades. But you have to follow your plan to know whether it works or not. If you are doing your analysis during your trade and you're not really following your plan and you're getting out of a trade early before it either hits a target or a stop, then you don't really know if your plan works. So you follow your plan for 20 to 25 trades, then you go review it and see if there's anything happening that isn't really fitting in with what you're trying to accomplish and your goals. So once you've done that, I think you've gone a long way to getting a lot more successful at this game. Now, I want to give you an example. I'm going to switch this over to my trading view. And I wanted to show you, and trust me, I don't talk a lot about individual trades and stuff like that. I know how difficult this game is, but I can tell you I put on a trade in ON right about here, and strong momentum. I'm not going to show the monthly chart. The monthly chart was coming out of a big area. It had been going sideways for a while. And the way I used to do this, okay, before I really had a trading plan in place that was concrete, and before I had divided myself in two and turned into an executioner once the trade goes on, I was I was analyzing everything that was going on, and I wanted to sell the top and then get back in at the bottom and just keep doing that over and over again. I'm buying and selling over and over again. And what I found in doing that is that I was actually pretty good at getting out. I mean, here's your divergence. You got a clear sign of contraction developing at this new high, somewhere in this low 40 area. I'm pretty much gone based on the way that I would look at it. That was the first sign where we didn't have momentum confirmation, just things like that. Now, I mean, you can do that. The problem I have with that is now I have to replace that with something else. And what I noticed was that when this stock was setting up again, which for me would have been right about here, which is really about the same price about 3, 4, 5 months later, is that I would miss this trade. I would not get in for this trade. And the reason is I was off gallivanting on, I'm looking at thousands of charts every week. I mean, I'm obviously going to find something else to play with, and then I wouldn't catch this move. Now, when you put on a new trade, let's say I take this off and now I put on a new trade. Well, now my odds, am I going to be successful on the new trade? Well, yeah, probably 50-50. Maybe because I use pretty tight stops, my win ratio is probably around 50-50. But the size of my wins are much bigger than the size of my losses, so the system works. But once I take a profit in this, I have to find a new trade. And now all of a sudden my odds start to shift against me because I have a winner here. I have a winner right now. And what I can do with this, and which is what I do now, is I take profits along the way, take a couple profits along the way and keep raising the stops, giving it plenty of room. And then when a new setup occurs, if I want to add to it, I can, but I don't do it that way. I typically just I trim, taking quarter pieces at a time. And in this stock, I have stayed in this position. Now, you might say, well, Guy, you went through a whole period like this where you didn't make any money. However, if I would have sold it here at 40, 41, 42, something like that, 43 even, if I was perfect, and I would have had to find something that made 50% over the next 6 to 7 months to keep up with how this did, even though it dropped and then went back to the new high. Now, you have to figure out what your plan is and whether you're comfortable with that. I'm not telling you to do it this way. If you're not comfortable having a stock go against you, then don't use this plan or this thought process. But for me, if I knew I had profits and I knew I could at least mark off some type of a break even or slight profit in place and give this a little bit of room to trend, especially when there was a really strong trend in place, then I knew I had pretty good odds that there'd be another run at some point. So this is the type of thing I think you should be thinking about when you're creating your plan and decide who you are. You have to decide who you are as a trader. Do you want to be the guy that gets out and then has to find something new? And there's nothing wrong with that. I mean, I don't have a problem with that mentality. Your performance will probably be better if you're disciplined about what you're doing because you're going to miss out on these drops. But I think in the long run, so if I've taken 2 profits, I have my original size position here. So if I bought it here and I put 10 grand in a stock and I take 2 profits, I'm still at 10 grand here. When the stock gets to here, I'm still right around 10 grand at this point because I've taken profits along the way. So it's not like the position has gotten too big. And then it drops down and then it goes again. And as it takes a move up here, I drop it back down to 10 grand again by taking another piece. And so I think you keep this mentality in place. Just make sure the risk doesn't get out of hand. And I think this will improve your consistency. So give it some thought. Let me know if you have any comments or questions, and we'll see you next time.